This is part 4, or what is owner's equity? So remember, what we're going through and doing is we're looking at just the balance sheet equation, or assets equals liabilities plus owner's equity. We're going to go through and look at each one of these different items individually, and then we're going to start getting into transactions. What is owner's equity? It's really the residual part of the equation, or what the owners own of the assets. If I look at my equation, like assets equals liabilities plus owner's equity, I subtract liabilities from both sides of that equation, I get assets minus liabilities is owner's equity. It's what the owners own of the business. So what is owner's equity? Different types of accounts. Common stock. This is what we're going to be issuing to our shareholders to denote their ownership interest in the company. You've got common stock at par, additional paid-in capital common stock, preferred stock. Retained earnings, what the company earns, or their net income, which we're not talking about yet, less distributions giving to the owners or dividends. Again, this is the linkage between the income statement and the balance sheet. Retained earnings are the earnings that the owners are keeping. So again, we're not there yet, but we will get there eventually. So for our purposes here, we're not going to be studying those retained earnings, but we're going to go through this after we're done exploring our December 31st accounting party, also known as our balance sheet equation. Now, I want to show you 2 different companies today that we're just going to take a look at their owner's equity real quick. So right over here is Meta Platforms. When we look at Meta Platforms, what you're going to notice over here is you're going to have stockholders' equity. And right over here, or also known as owner's equity, you'll see over here the common stock, additional paid-in capital, and then you're going to see over here retained earnings. So these are just going to be the general types of accounts. Now, what's really important here is that with common stock, can you have a variety of different shares? And the answer is yes. What you're going to see over here, Class A, Class B, what's the difference between those two? It's Mr. Zuckerberg has Class B shares that have 10 times the voting rights of Class A shares. So that's why Mr. Zuckerberg will never lose control. Let's now take a look at Snap, not Crackle and Pop, but just Snap. So this is Snap, and this is a few years ago, but the reason why I'm showing you this is so we can see all the different kinds of crazy different types of common stock you might have. You can have convertible preferred stock, convertible non-voting preferred stock, convertible non-voting preferred stock, Series D, E, and F, Series FP, convertible voting preferred stock, Class A non-voting common, Class D voting, Class C voting. So all of these different types, when you are looking at owner's equity, and you'll have a lot of different types of stock. So again, it depends on the type of financing that a company has gone through and has done. But as we're just looking here at accounting, all we're really going to be doing in these introductory levels, we're just going to be looking at common stock. But as you can kind of tell, like looking down the rabbit hole, there's a lot of stuff there. But this is more once you have the basics, and we're going to kind of build off of that. I have videos for intermediate accounting when we get there, which are very long and never end. But in any event, I want to thank you today over here for joining me. Please leave any kind of questions below, and I really appreciate your liking and subscribing to these videos. Have a great day, and I look forward to seeing you on the next video. Have a good one.